All right, let's stick on those downward vibes. Bed Bath & Beyond shares are plummeting as the company warns of deeper financial troubles ahead. In a business update it put out this morning, the company emphasized its net loss over $385 million for the fiscal third quarter of last year and says it's considering options, including obtaining bankruptcy relief. So let me just not bury the lead here and just start off with this. Why are you seeing the stock down 20% in the pre-market? Company notes two things. It sees substantial doubt about the company's ability to continue as a going concern. Anytime you see struggling companies put this line in a statement, usually they do not include the word substantial. So just the fact Bed Bath & Beyond put that in there is very telling and a massive red flag. Number two, as you just mentioned, they did not rule out filing for potential bankruptcy. So put these two together and you have a retailer after a very bad holiday season, I will run through the numbers here, suggesting it may not make it to the holiday season of this year, as Loop Capital Anthony Chicumba came on our network last week and told us might happen. This is a company essentially saying it may no longer stay in business. But again, a very ugly quarter for Bed Bath. Yeah, in this business update, they also gave us some insights into the financials. And this coming off of what was an extremely challenging quarter, one where Sue Gov actually noted within that update that despite some of their more productive merchandise plans, improved execution, financial performance negatively impacted by inventory constraints. And then they also continued to have to weather, like much of the market, especially in retail, some of the micro and macroeconomic challenges, had reduced credit limits as well, which impacted their ability on the inventory front too. But then just thinking through the financials of it all, net sales, they're expecting to report that coming in at approximately $1.259 billion. That's compared to the $1.878 billion in the same year ago period. And so that just adding on to what you laid out in the fact that they added that very serious sentence at the end of that bankruptcy nod saying these measures may not be successful. Also delaying the release of their 10Q. Now, I reached out to Bed Bath & Beyond to get the amount of cash they had coming out of the quarter. They did not return my request for comment on that, but seeing how much the cash they had exiting this quarter is very important. It will help determine if there is some form of path forward for this company to stay in business. Again, that number not there is a red flag. And then also a red flag, as we talked about, I believe, earlier in the week, they were unable to convert a lot of debt holders. They were trying to do a debt conversion. Not a lot of debt holders submitted papers or wanted to turn their debt into various other options to help Bed Bath survive. That's a huge problem. Huge problem.
Right. And let's just remind people that just because a company is filing for bankruptcy, which the company is not yet saying it is, but even if it does, doesn't mean Bed Bath & Beyond is going away, right? Correct. It doesn't mean it's closing its doors and that's it. It's done. It rather allows the company potentially under a different structure to restructure, to try to right the ship. And that's what Sue Gov sort of seems to point to in this statement. She says we have a clear vision for the company. She talks about what they want to do. Firstly, refocusing merchandising and inventory, cutting costs, operate more efficiently. And she says, secondly, to focus on strengthening the financial position. So it might be that the company comes to the conclusion that it can only achieve those goals or best achieve those goals through a bankruptcy filing. Well,
now Bed Bath has essentially entered the black vortex of retailers, and I've seen this playbook happen before. Sears, Linens and Things, Circuit City. Usually you will see pretty much the same release that Bed Bath put out today. Next steps you will likely see. No, you're not going to see a lot of discounted products in the stores or, to your point, Julie, going out of business sales. But what you will see is even less inventory availability in a retailer, and the shelves in the store are likely to get increasingly empty because suppliers are worried about ultimately getting paid. What that does, that sends more people online and to all of the company's other competitors.
Now, of some of those retailers that you mentioned, I'm trying to go back in my mind because some of them do end up eventually closing the doors. There's no more Circuit City anymore, for example. What are the retailers, and I can't think off the top of my head, that have exited bankruptcy? Because there are a number of them. Right, JCPenney. So there are a number that enter bankruptcy. They do achieve what they're trying to achieve, and then they come out of it, and they might not be, thriving and huge and dominant, but they are surviving. So we'll see which path this ends up going.
And some of them only end up selling off the IP so that they can get some type of remediation financially. But, I mean, we've seen that with Sports Authority. Sports Authority sold off their IP. You had, of course, Sears and like the Sears local play that you were talking about just 2 weeks ago.
They sold Craftsman, right? I believe.
Craftsman.
Zombie retailers.
And Toys R Us, which now with True Kids and all of the other different iterations that's taking on, essentially being a seasonal IP play. And so it could be an IP play that we see come forward further in the future should the bankruptcy proceedings not be successful for them if they enter into that as well.